The Gwart Show is sponsored by Ellipsis Labs. Ellipsis Labs is building a world where mainstream finance happens on-chain. Their first product, Phoenix, is a fully on-chain limit order book DEX on Solana doing hundreds of millions of dollars in volume. I know this team personally. It's one of the strongest in the space. If you're interested in working with a team that's here to stay, Ellipsis Labs is hiring engineers passionate about DeFi to join their team. You can find Ellipsis Labs on Twitter at ellipsis_labs or head to ellipsislabs.xyz to learn more and apply. Hey guys, today we're here with Proph3t from MetaDAO, which is a new attempt at Futarchy. And I think this will be very interesting because I don't think I've ever had anybody on who's in the governance sphere. So maybe this will open up an interesting conversation. Proph3t, do you want to introduce yourself? And maybe just a little bit of background.
Sure. And thanks for having me on board. So I'm Proph3t. I'm a programmer. Before I was Proph3t, I wrote smart contracts in Ethereum DeFi. And before that, I wrote caching systems in Web2 as a software engineer. And came across a YouTube video where this economist named Robin Hanson explained this radical idea where you could have markets make all the world's decisions, all the way from a small business deciding what geography to expand their product into, to governments famously deciding what public policies to select or what leaders to elect. And that made a lot of sense to me. It's been a long time market nerd, and it made sense to me that markets would be better decision makers than existing ways of making decisions. And so started working on MetaDAO, and now we're here.
Talk to us about Futarchy. Give us like the ELI5 for the time being, and then maybe I can probe a bit more.
Sure. Well, I guess the elevator pitch that seems to work recently is Polymarket. Like if you imagine Polymarket as this truth machine, then it makes sense that you'd want to use a truth machine for making decisions. And so that's what MetaDAO does. We use markets to make decisions. And that's what Futarchy does.
Got it. Okay. So like just for some context in terms of governance in crypto, what do you think are what stood out to you as like the obvious problems maybe, and then we can lead more back into Futarchy obviously, but like what do you see as the obvious problems with how governance is generally structured in this space?
Sure. I mean, the big ones are that people don't vote, and when they vote they don't know what they're voting about. And then as a result of that, you have like all this DAO theater where really it's like the teams that make the decisions and they're not actually decentralized. I would consider those the big three. Yeah,
I think that's like also what I have observed. Maybe just another kind of general question. I think the short answer to this for a lot of people is that all projects need governance. But I want to ask you, what types of projects do you think need governance? Like, do you think every application in crypto needs governance, or are there areas that may not need token voting or Futarchy now if this becomes sort of a more popularized version?
I guess there's like Rye, right? Which has, actually before that there's Bitcoin, right? Bitcoin is like this immutable thing where you have 21 million and like nothing is really supposed to change other than the hash rate that just changes algorithmically. And so Bitcoin doesn't seem to really need governance. And then there's Rye, which is like one level more sophisticated where they use a PID controller to set interest rates. And that, actually, like I think Vitalik has a blog post from a long time ago where he talks about type 1 DAOs and type 2 DAOs. And type 1 DAOs are like DAOs that, are the organization is making decisions over like a limited set of decisions. So in Bitcoin's case, Bitcoin could be considered a type 1 DAO because they're deciding what the difficulty should be. Rye would be a type 1 DAO because they're deciding what the interest rate should be. And then there's type 2 DAOs, which are governing over arbitrary decisions. So MetaDAO is a type 2 DAO because anyone can raise a proposal that's like do pretty much anything, like build a new product or fire me or allocate money to something. And all of those can be like executed by the governance system. And like pretty much every project in crypto has like some sort of governance. I guess whether it needs to be type 1 or type 2, I think depends on how much of the system you can model at the start versus at the end. So like, I guess with like a yield aggregator, right? So like you're in finance and we don't really have one on Solana yet. You, as a yield aggregator, you've got to integrate all these new sources of yield. And so it's not really something that you can build as like just a DeFi primitive, the immutable thing with no governance. Like you're going to need to integrate these new things and you're going to need governance to do that and to like hire people to build these integrations. Whereas, yeah, like Uniswap seems to work pretty fine being relatively constrained. Like it seems like you're pretty well able to encapsulate the logic of swapping within like logic that they could write a few years ago. And it doesn't really need to change that much. So I think that's like the key thing.
Okay, well, we'll jump into Futarchy. We're going to come back to governance because I have my own sentiments on it. I don't want to be too biased, but we're definitely going to get back into just governance in general. But okay, so how does MetaDAO work? Like, can you just explain the basic functionality of it?
Sure. So yeah, how MetaDAO and how Futarchies work more generally is, so you've got like a project token and someone raises a proposal just like they do in a regular DAO. In a regular DAO, people vote on whether or not the proposal should pass. So yeah, like in Uniswap's example, say like someone creates a proposal to turn on the fee switch, then people vote with their Uni tokens. And if the Uni votes yes, then you turn it on. And if not, you don't. In a Futarchy, instead, people bet on whether or not it would increase the price of the token if you were to do this proposal. And so, yeah, imagine Uniswap is organized as a Futarchy. Then people would bet on what the price of Uni would be if the fee switch were turned on, what the price of Uni would be if the fee switch were not turned on. And say if the market says that Uni would be worth $1 if the fee switch is turned on and 60 cents if it's not, then you use that information to turn the fee switch on. So essentially it's just like people bet on whether a number will go up if a proposal passes. And if enough people bet the number will go up, then you pass the proposal. And if not, you don't.
So where do you see this fixing like an obvious leak in governance? Like explain to me how market-driven decisions are strictly superior to yes or no votes, but that are also determined by who has the most tokens. Like where do you see it the big unlock, I guess?
I mean, yeah, when you're voting, you don't really have like a strong incentive to vote unless you own, like a huge percentage of the supply. But just like a normal holder does not have the incentive and doesn't have the incentive to research. Whereas in a market, when you're trading, you do have that incentive, right? Like you can make money by trading. And these are just markets that you trade in. And so I think that's like the key difference. And then empirically, there's like a good empirical body of evidence for markets being superior to even experts. So yeah, like presidential prediction markets have beaten pollsters 74% of the time. Google and HP and like Eli Lilly have run internal prediction markets on things like future printer sales in HP's case, or when offices will open. And those prediction markets almost always beat their prior exit forecasts. And then, in the equity markets, my favorite example is in 1986 when the Challenger space shuttle exploded over Cape Canaveral. It took the government 4 months to determine that the root cause was Morton Thiokol's O-rings, whereas the market had identified Morton Thiokol as the cause, as in Morton Thiokol's share price was trading far below the other government contractors involved within 16 minutes. And so the thesis is essentially like markets are good, and so use them to make decisions. That's kind of what underlies Futarchy.
Okay, that's a good overview. All right, so what decisions then, in your opinion, need to be voted on to begin with? Like, what do you think is a justified usage of a mark, like putting up a proposal and then using a market to determine an outcome versus, like what like level of proposal needs to be voted on like this?
I mean, the more important ones, I think. The way I kind of think about the markets today in MetaDAO's case is the market is kind of like my board of directors. So instead of reporting to a board, I instead report to the market. And so it makes a lot of those like key decisions, like I don't know, should we sell tokens to raise money, or should we like develop this new product? Because those actually have an impact on the project, like a big impact. Whereas, yeah, like I don't know what daily tasks I should be doing. I don't think makes sense yet, at least for market, because it's harder to measure that the impact of the smaller decisions. And then obviously you don't want to like bog down the traders with too many proposals.
Yeah. So I think like looking through your website, right? Like I saw some of the examples you gave of where prediction markets have like shown much better, accuracy. Like one was like commodities markets tend to predict weather more accurately than like the US government, whatever their weather forecasting thing is. But I'm kind of what's not so intuitive to me is how this same rationale applies to a DAO or something. Like it's not so clear how the wisdom of markets, if you will, actually knows what's best for a project that is maybe in terms of actually being able to implement something that's somewhat centralized. Like there may be like 10 contributors to it. And so it's not like immediately clear why, like extrapolating from, okay, commodities markets better predict weather. Like this is like a sort of large scale versus, okay, there's 10 guys who work on this on a daily basis and there's people trading in and out. What is your like kind of thought regarding that? Like, why do you think that markets would have any idea what's best for, I don't know, Uniswap?
Well, so you're saying like the markets here don't have enough scale, or I guess or that like you have uneducated people?
Scale is one part of it. Yes. I guess what I'm like, so this now goes back to what I was going to say we're going to get back into governance pretty quickly. Like generally what I have seen with DAOs is, and I mean, I'm not so in tune with this anymore, but a lot of what I would look at, a couple of years ago in these forums, you have people suggesting like just randos, right? Suggesting, I don't know, ideas that just don't seem very plausible. And I'm sitting here, I'm like, I certainly hope that these aren't the people making these decisions. So I think like where I come from generally is like, I don't know that the wisdom of like a large group of people has any idea what is best for a like relatively small centralized like group of decision makers for the time being, right? Like I guess that would be kind of my question.
Why do you believe that?
Generally because I don't see these projects as being particularly decentralized in practice, right? Like Uniswap Labs at the end of the day ships Uniswap will eventually ship Uniswap V4. Like it's not the small scale token holders actually writing the code. And mostly what I have observed with organizations or companies is that the people who are in charge and then the hierarchy under them typically have a better idea of what is best for the company than like shareholders, right? I mean, now that I guess this also kind of depends on the scope of what shareholders are voting on, right? Like, so there's shareholder meetings for, every company and on the New York Stock Exchange, and they go and vote, on certain ideas, but they're not sitting there telling an Apple engineer or designer how, the next iPhone should look. So this is where like the disconnect is for me, I guess, is I don't know that people that, like I said, the wisdom of markets, if you will, this is a terminology I hear thrown around, actually know what's best for projects in this context. It seems like much more of like a soft understanding or a vision of like where a project should go versus a shareholder who, doesn't have like day-to-day interaction with, like a company or a DAO or a project. Do you disagree, I guess?
I don't disagree. I mean, I think it's all context dependent. I guess like the three things where markets can be better is they can be better at surfacing information, right? Like if you have like a presidential prediction market, for example, you have people trading the prediction market who are all over the country as opposed to in just like one geography. I guess I would imagine that pollsters are probably more concentrated in the coastal areas. And so that may be one reason why they're better. The other thing is that markets can be less emotionally biased. And the third one, and I would say is probably the most important, is that managers can sometimes have skewed incentives.
Yes.
that even if they know the right thing, they don't necessarily want to implement it. And some evidence for that is the existence of the private equity industry and the activist like funds, right? Like if companies were already well run by the people who like if they were already making the right decisions for the interests of the company, then it wouldn't be possible to buy out a company at a premium and then turn a profit, which is what buyout funds do, or get managers to do something other than they're doing and then also turn a profit, which is what activist funds do. And so, yeah, I mean, I think it's context dependent. Like, yeah, probably an Apple engineer is going to know best, like what microcode to put inside their CPU. But maybe actually the market is going to have a better sense of whether or not Apple should release like a new product, because the people trading in that market are actually would be the people who would be buying that product. In MetaDAO's case, like we'd put a proposal for whether we should develop this new product. And I think that actually made sense because I am an engineer and I'm not a big user of some of these DeFi products, at least anymore. And so like it makes sense to have the people who would trade those markets.
Do you think that Steve Jobs would have been canned in a Futarchy system? Is that how you say it? Futarchy? Do you think
Sure.
he would have been fired? Like, I think that's kind of like an interesting question.
That's a good question. Yeah.
Because he was very much like an iconoclast, as you know, and a lot of his decisions, I think, at the time were considered, like, you know, in retrospect, okay, so he was so far ahead of his time, and he really like optimized for aesthetics in a time when that wasn't like really thought of as a driving, you know, maybe like, you know, growth strategy. But like he had some very novel ideas, and I'm interested if you think like, yeah, if in like this type of system he would be, you know, cast away.
Yeah, I don't think I know enough about Apple to make a statement on that.
Yeah, I don't either. Okay, so I want to go back for a second. Like you were talking about like private equity buyout funds. I think this is an interesting example, right? Because like a big fund will come in and maybe they'll like cut 50% of the staff. And that's like a net positive for them because they're doing a bunch of financial engineering. But for the long run of the company, that's not right. Like that doesn't optimize for like sustainability or growth or whatever. How does Futarchy fix this?
Well, I would say a lot of the times that like cutting of staff is actually something that makes a lot of sense. So managers have incentives where they generally want to maximize headcount because on your resume as a manager, you are rewarded by number of people that you manage. Like it looks good to have managed a 5,000 person team, for example. It looks better than managing a 5-person team. And so like a lot of the times the managers have these skewed incentives that lead them not cutting people even when they should be, even when it's in the interest of the business. And private equity is coming in and correcting that.
Okay. I want to go back actually for some context. What do you think should be the value of these? Like, let's kind of stick to crypto for a second. And I think this question does matter, at least the way that, from my perspective, what should be the value of tokens in the long run? Like, should these effectively resemble equities? And we're all kind of playing this game where we dance around and pretend like they don't. But does this system sort of imply that these are equities or ownership in effect?
Yeah, I guess. I mean, yeah, okay, like, ish. I would say it's like,
yeah, okay. I'll like step in here for a second. The reason I say this is because I heard on another podcast you were saying like the idea for the market is to correct such that it drives the value of the token up. Like that is functionally what they're trying to do. And look, I'm 100% in agreement with you. Like, but with that said, there are some sort of esoteric, in my opinion, kind of incomprehensible versions of tokens or an understanding of tokens. A good example is, I don't know if you've ever seen this like tweet from Vitalik. He thinks token, God, I forget what his exact words were. It was something along the lines of like, tokens should never be bought with the purpose of selling them to somebody else at a higher price. And so I guess when I look at these systems, a lot of it is somewhat dependent. Like, okay, do you view these as securities? Like, do you view these functionally as stock in a common enterprise? Or do you want to, or are we pretending like this is some novel version of ownership where people want to govern for some like unknown reason?
Yeah, I mean, I would say if you want to view it as ownership, I think that's perfectly valid.
Do you think that DAOs should act functionally as companies? Well, actually, like, let me take this back for a second. The organizations in Web3 crypto in the long run, are these like companies? You know what I mean? Are these enterprises in your mind?
I mean, to some extent, I think like one thing that I've seen some DAOs do is be more like the DAO is kind of this central capital allocator, this like machine that sits in the middle that then allocates money to various like sub DAOs that are executing on its behalf. I guess like MakerDAO is kind of a shifter now. What is it called? Sky is shifting in this direction. But yeah, I would say DAOs are probably more similar to companies than most would like to admit. And I mean, like companies do work, right? Silicon Valley startups have been probably more successful at delivering products that are useful to people than crypto projects. And so I would say, like, if it may make sense to try to replicate a lot of what works there.
I 100% agree. I think, but most of my reservations about a lot of how DAOs and governance works is that it's sort of like they want to have their cake and eat it too. It's like you don't want this to have any real value, but at the same time you want to have all these tokens, and it's almost impossible to reconcile this in my mind. So then and I'm just going to press you on this one more time. Like, so then when we talk about, okay, people are betting, right? Like there's this two-sided market. People are betting as to whether or not a proposal, for example, will drive value to the token. The value is a function of the revenue or like earnings of the implementation of this proposal, right? Like the revenue that this will drive to a token.
Sure. I mean, yeah, in an efficient market, all prices come from discounted future cash flows. And so like, yeah, sometimes our markets are inefficient, but that is at least in theory, like what the people should be betting on.
Yeah. And I think that makes I understand the general premise. So what, like, in terms of what MetaDAO is then attempting to do, how are you guys structured? Like, I know you're working with other DAOs. How does that kind of, what is the relationship there? And then also, what is the meta token? I actually am not so sure I know exactly how that part of it works either.
Sure, yeah. So MetaDAO is a DAO. There's no like MetaDAO Labs or anything that owns any IP. And all the legal property is actually the property of a DAO LLC in the Marshall Islands that recognizes the sovereignty, that says like whatever the market says is like what's legally binding. And yeah, so MetaDAO is a DAO. We, as our first product, we allow other DAOs to make decisions with markets. We like offer that as a service. So yeah, that's like the TLDR. And then yeah, the meta token is the governance token of MetaDAO.
Okay, so what does the governance token of MetaDAO do? Is it, do you have to have the governance token of MetaDAO to vote on proposals for other DAOs or no?
The governance token is used to make decisions. So every proposal to MetaDAO is made based on whether or not people would think it'll increase the value of the token.
Okay. Increase the value of the meta token.
Correct.
Okay, got it. So like, what is an example of a recent proposal that you can kind of flesh out for us?
Sure, yeah. So we build software for DAOs to make decisions in markets. And so one idea that I had was, why don't we build, actually, it wasn't my idea. It was actually Tully's idea of we should build like Futarchy.fun. Essentially, yeah, build like a fork of Pump.fun where some percentage of every meme coin supply gets allocated to a Futarchic DAO, so that it can be allocated by the market. Kind of like how, so a lot of meme coins today will do airdrops to various communities. And here, instead, like Bonk missed airdrop, for example. So if Bonk were a Futarchy, instead people would bet on whether or not that airdrop would increase the price of Bonk. And if it did, it would go through. And if it didn't, it wouldn't. And so, that was an idea that I had, and I put it up for a market. We had $500,000 in volume and like 50 people who traded that, and 1,300 trades, which is kind of crazy because it meant that there was more than 30 trades per user. So the proposal ended up failing because the market said that it would not increase the value substantially.
I also heard you talk about another proposal where I forget exactly the context, but some guy ended up betting like upwards of $250,000 on some proposal, and I forget what your conclusion from this was, but I think you felt that it proved like like a certain attribute of a Futarchy maybe. Can you like explain that what happened there?
Sure, yeah. So back in February, Ben Hawkins, who works for the Solana Foundation, created a proposal to buy the meta token for below spot price from the treasury. So essentially it was a shitty deal for the DAO. And Ben was trying to test this theory. He wasn't a bad actor here. So he created this proposal, and then he wanted to see if he could manipulate the markets to get it to pass. So he spent $250K bidding in the pass market, essentially placing bets that he's like, I will buy Meta if this proposal passes. That's like what it means to bid in the pass market. And that drove up the pass price. And so like if no one else had sold into him, then the proposal would have passed. His manipulation would have succeeded because on chain, we do like a time weighted average price of both markets. And if the time weighted average price in the pass market is higher, then we pass it. And if not, we don't. If no one had sold into his high bids, then the proposal would have passed. But what ended up happening is people saw his high bids and were like, "Oh crap! I can sell to Ben for I don't remember what the price was at the time, but say like I can sell to him for $1,000, and then when the proposal passes, I think I'll be able to buy back for 500, and so I can essentially double my Meta holdings." I can essentially extract money from him if his proposal passes. And so they sold into him, and that drove down the pass price. And then the proposal ended up failing because of that, which is like, you kind of know that's how it will work in theory, because if you try to manipulate a market, you're a noise trader, right? You're trading based on something other than alpha. And in a market, in theory, you make money by trading against noise traders and you correct their mispricings. But it was cool to actually, see that in practice.
Why did you choose to build this on Solana?
Yeah, so at the time, because I started actually a while ago. So published the white paper November 10th, 2022, and which was 2 days after FTX had halted withdrawals. And at the time, Solana was non-consensus. I've been a long time market nerd, and in like just one thing, if you want to play in markets, like one thing that you really have to drill into your head is that you have to be both non-consensus and right to make outsized returns. Because if you're right, but you're also consensus, then other people will bid up the opportunity such that it's like not that really attractive. I believed at the time Solana was non-consensus and right, which meant that it was fertile ground for like building projects, because it meant that you had less competition relative to the future opportunity, as in like people who would be using the chain and capital that would be using the chain. So that was the primary reason.
Thanks for listening to The Gwart Show on the Blockspace Podcast Network. Subscribe to our newsletter at blockspace.media to get the show directly to your inbox. Show links, transcripts, and Bitcoin articles twice per week. Stay ahead of the conversation by visiting blockspace.media.
Did you feel like the culture in Solana was more welcoming, perhaps, to this idea? And especially given how much governance ideas and theory has come out of Ethereum, did you feel like there was something about Solana that had a bit more of, like a culture that would accept maybe a more like financialized version of governance?
Yeah. I didn't anticipate that, but it seems to be the case. I didn't know really anything about the culture of Solana before I started developing on it. But yeah, it does seem to be the case. Like on Ethereum, you have all these people talking about like quadratic voting and like wanting to make it fair.
What do you think of quadratic voting?
I think it's stupid.
It doesn't make much sense.
Yeah. And then all these things devolve into Sybil problems, right? But no one wants to use WorldCoin. So you just like, it's not practical.
What other, have you seen any other types of governance systems elsewhere, Ethereum or any other chain, I guess, but maybe specifically in crypto, that have piqued your interest? Like, is there anything that kind of like stands out? Like, oh, that's actually a pretty good idea. I mean, obviously you're working on this Futarchy thing, but what other projects do you think have done well or have kind of put forth novel ideas?
Like, I think even Bitcoin, you could really say, is a governance innovation. Like that's the core unlock, because before we could have run, there was like BitGold, but the key thing is like making it decentralized so that you can't tamper with the supply. Like you don't have a central issuer. And so I would say like crypto as a whole is interesting to me. And I would say most of crypto is like the interesting stuff is governance innovations. I don't think I've seen like a good general purpose governance system yet. I've seen a lot of like things that haven't worked, like token voting. I guess a lot of people have tried to play with conviction weighted voting and stuff, and like Polkadot I think has that. But yeah, I can't say I have found like many interesting general purpose governance systems.
Yeah, it's kind of fascinating to me because we get, almost every token functionally is a governance token, and yet there's nothing particularly novel or valuable about these governance tokens, and we keep getting more and more. And I think that, like, at least from my perspective, a lot of what I can't reconcile is you see people talking about DAO innovation and, where we're pushing the governance space or whatever. And I'm like, what are you talking about? Like, is it not, there's never been a successful DAO, in my opinion. Like, this is a bit of a like aggressive statement, but all the DAOs are controlled by VCs. And like, I've always thought like I don't know if I should know exactly how to say this, but I don't. But it seems like with these when you have token voting schemes, like the marginal utility for a VC is much greater than anybody else, right? And it really doesn't matter. And we see this constantly over and over and over, right? With like all these DAOs and VCs, and like they give handouts to their other portfolio companies. I remember when Uniswap had this thing where it was like it was deciding on a bridge partner for Uniswap, and of course, like it ends up being just a vote off between Paradigm and A16Z, and it's like there's a lot of discussion about governance in general. I'm like, there's nothing really that valuable that's come out of this. Do you think that we see a shift towards more professionalized DAOs, and like, do you think that Futarchy plays a role in this going forward? So that's a bit of a diatribe, but this is like also why I wanted to just talk to you about governance in general.
Sure. And I'll briefly join you on that diatribe, which is like one of the reasons why I left Ethereum was because, I was disappointed with the people that represent DAOs on Ethereum. Like you have all these people that have their podcasts and they talk about DAOs and they don't actually say anything about it. Like I've listened to these podcasts and they talk about things like, oh, like corporations are like these I don't know, they'll use some analogy, and then a DAO is like a garden that you have to tend.
Exactly.
Or they'll use, and I've read these blog posts and I've listened to these podcasts, and it's just like a crock of shit. Like, it's not prescriptive. It doesn't help you. It's just like ideas that help people feel good at Zuzulu.
Yes.
And so, and then, sorry, what was your question? Just got a little.
Well, no. That was good. Just let it all out. It was, I mean, basically, I was also grieving about the state of DAOs forever, but I was just asking, like, do you think we see a transition? Well, my first point was just to more professionalized organizational structures, and then also if Futarchy plays a role in this, maybe.
Yeah. I mean, I guess we did see a shift. It's been a while since I've looked at Ethereum DAOs, but I remember at the time that I left, there was a shift ongoing to more replicate traditional institutions. I think Element Finance had a board of directors type thing. Of course, they didn't call it a board of directors; they called it like a community council or some shit. And so I think we have seen a shift to that. The interesting thing is that DAOs are dysfunctional. What's the real red pill is if you view that DAOs are dysfunctional, they really aren't that different how companies are organized, right? Like, companies have voters, and they're supposed to be the ones ultimately deciding things and just delegating things to management. And so if DAOs don't work, you can kind of see that as actually maybe this whole thing doesn't work. Maybe democracies are not really functional, and maybe companies, the way they're currently run, is not functional. And maybe we can replace it all with markets.
Yeah, well, and also just for a little bit of outside context, it's also I was. I say this like I have some, standard that my guests must meet, but it's also why it's interesting for me to talk to you, right? Because I do think this is a more interesting version of governance. I personally have maybe I have too strong of sentiments towards Bitcoin, but I have my reservations about governance in general, right? And I often it's not so clear to me why in open permissionless just shifting system you even need one, tokens, and two, you need people making decisions over protocols unless they are willing to say, yes, we are a business. And this is where this divide, in my opinion, comes from. And I think mostly what you're working with is closer to something that would, assuming the feds aren't listening, consider itself a business. But, if you're claiming to be, an open source protocol and you need to make a decision, you can just ship it. And if people like it, they can use it. And if not, they can fork. But this is not how this entire crypto ecosystem has been built out. It's been very much built in a way such that these tokens in effect create moats, right? And
I think you actually have a great tweet that from a long time ago was one of the first Gwart tweets I saw, where you talked about I forked Aave 6 times today. Yeah. So far, yeah. And so you can fork all you want, but ultimately there is there are limits to that. Not everything is just software. Some things have state, I guess, in the case of a borrow lend. And so you may need to govern aspects of that.
Yeah, I think this is this is like a chicken or the egg thing, though, because the way that I see this, this is because the people have decided to build it this way, right? And so now, I'm just using Aave as a random example. I don't even really follow or know how well their governance system works, but it's say they're going to onboard something new, as collateral, because it has a token and because people vote on that makes it that makes a token necessary. There are a tremendous number of free open source software projects that have never had a token, right? Like Linux. like a large number of like protocols on the internet. And also, I do counter this with something like, I mean, I don't know how familiar you are, but like Lightning on like, first of all, Bitcoin, obviously, and then Lightning does not have like some type of governance system. It's people, like companies, real companies, ship Lightning tools and services, and if people use them, they use them. If not, then they've failed as a company. And if they can build, like if they can take margins, if they can make enough to sustain themselves as a company shipping products atop Lightning. But like this is like where I've never really been able to reconcile like the difference between a protocol versus like a company or a DAO. Like I do see your point with regards to like making decisions, but like you stated at the beginning, right? Like Uniswap V2 doesn't need governance, right? It's all like they're all like ossified smart contracts. So they're like that's where I have difficulty kind of reconciling those.
Yeah, I mean, I guess it just depends on like what percentage of things that matter are in like category of need governance versus not. I mean, yeah, I agree with you to some extent. Like a lot of this is contrived because you have people that have sold token warrants and they need to make money for themselves and they want to make money for investors, and you can't just say the token does nothing. I mean, maybe you could. I guess this is kind of what some protocols are doing now, where they just say like the token is a meme coin and it derives value from the memetics of people using our projects. But historically, they've needed to like provide some use case. But I would ask, like, so in that Aave example, what's your solution? Like, if you want to add a new collateral, then just you create a new protocol, and then everyone has to move their money from Aave old to like Gwart Aave.
I mean, I think the practical answer is that you're right. Like liquidity is very obviously a moat, and it has network effects. In my vision, like, somebody who would like be championing my cause right now is C-Node. The like little cypherpunk C-Node would be 100% on my side here, which is like the most decentralized version of Aave would be one not where there's a wide distribution of tokens for governance, but one that is not governed at all. And so it just kind of depends on what we're trying to do here. And like most of what I've seen people trying to do is like take some of these esoteric writings from Vitalik and retrofit them into how they want a DAO to look. But in reality, it is a company. And it's not lost upon me that like regulation is an impediment to this. Like that is obviously that is a real problem, right? Like nobody really knows what the rules are, and nobody really knows if these tokens can derive value. But what I would just say is like, at the end of the day, these tokens, if they act as equities, like for a company, that's fine. But like if not, well, maybe still, you're not building like the free, open, least extractive version of the internet. You're rent seeking a little bit. And maybe the margins are like, maybe it has reduced frictions much, much lower, such that the rent seeking is much, much lower. But if you're just owning tokens that derive some value from trading fees or like whatever it may be on a protocol, it's like, well, the least extractive version is one where there is no token and no rent seeking at all. And it acts more as like a peer-to-peer protocol. You see what I'm saying?
Sure. Yeah. Although if there's no rent seeking, then there may be not an incentive to build the thing in the first place.
Right. Exactly. But then that comes back like this. This is the bizarre circular issue of, okay, so what's the token worth, right? Like if you want to be competitive versus TradFi, you have to be like, you have to be competitive on the margins, right? And it's going to, all of this is open source software. It's all going to trend to the margin. I look at this and I say like, yeah, these tokens, like they probably don't have value, not because I think that I have other issues with tokens in general and launching a token without like giving any, any investors any idea what this thing is going to do. Not so much that, more just functionally from like a cash flow, long run valuations of these. I don't see how these don't get out competed eventually by something that does not have a token. And then I guess like sort of to your point with regards to like, well, what's the incentive to build this? I'm not sure, to be quite honest. Like we can talk about building all these public goods out, but like these public goods would not be built without a token. But if the token's valueless, it's like this weird, like you could really go down this rabbit hole and come out the other side and be like, dude, I have no idea what we're doing here. Like it is kind of what I concluded. You can probably see a lot of this from my manic tweets.
Sure. I mean, yeah, I think that I'm not sure if DeFi tokens right now are undervalued or overvalued. I think they likely have some value. I mean, it's completely like in the US, the financial services industry is 8.5% of GDP, right? So if DeFi becomes the financial services industry, and I mean, it could still take 50 bips of GDP and still be like an insanely valuable business and provide and be cheaper. So like be competitive with the rest of the economy. So I don't necessarily agree that like cash flows necessarily tend to zero. A good example of like where I think cash flows definitely don't tend to zero is something like ENS, where like you have these strong network effects where it's like, if you try to do like, I don't know, say tomorrow you're like, I want to do .Gwart, and try to get everyone to sign up for .Gwart. Well, like it's going to be a tough sell relative to .eth, and .eth, like ENS, can charge money for people to set up a .eth. And so that's like a clear example where it's not just like free and open source software where anyone can like fork it and easily gain traction.
I was kind of being a bit hyperbolic because I do think that businesses can be built atop open source protocols. And I think hopefully those businesses are less extractive, and that's why we end up using them. I guess my larger point here is there's a lot of inconsistency. And like if you look at something like Linux, all of these large public companies contribute to Linux. They contribute to the Linux kernel, right? It's like it's a public good, and everybody knows that like it's a net positive for there to be like people contributing to some like open source architecture on the for internet protocols and like everything that comes along with that. And so Amazon and Apple, I don't know exactly, but like all of these companies contribute to this public good. This is much more in line with how I view public goods on the internet, right? And like Apple may use Linux in some capacity, and then it's a net benefit to them as well because their systems can tap into this, right? That's more how I see the vision of public good infrastructure and like who maintains it, right? And I guess like to some extent, I know like Uniswap like contributes to Ethereum. I mean, I don't know. It's all like so convoluted. There's all these like tokens that just distort all of this stuff, and so it's just I guess my point, and I'll just stop screeching, but my point is like there's some rationale in this space that, well, it must be done like this. You have to have a token for governance. And my thing is like the reason you want a token is to build a moat, which is fine, but like let's not kind of like muddy the waters here with this, open source public good type stuff. Like it's a business, right? And that's fine, but it's a business. But there's things that come along with being a business that you don't get to sort of obfuscate rules for. And like this is, I mean, I think that if there's a principal agent problem, then like, yeah, you should have some type of shareholder guarantees or rights or whatever. Like that's the future that I would like to see maybe with regards to businesses built atop these protocols.
I mean, I guess like going back to the Linux example, I mean, this like sounds similar to me of like the the anarcho-capitalists, just like we don't need governments, like everyone can have their own like little thing and it'll all magically work. I don't necessarily agree with that. There are like really strong economic reasons as to why that doesn't work long term. Like there's an economic reason why Linux is not as good, and this is unfortunate for me because I like do all my development on Debian. But like a lot of times it breaks, right? Like it's not really as good as Mac OS in terms of like a lot of things I would like it to be. And the reason for that is like the economic reason for that, which this economist writes about in this great book called The Logic of Collective Action, is just that like if there's a common good and you receive 10% of the benefit of that thing, then every dollar that you invest in that common good only gets reflected as 10 cents back to you. Or every dollar of improvement to that common good is like only 10 cents really to you. And so like you arguably Linux and those of its ilk are underallocated because you don't have a single entity that like funds it and owns it and derives like a large percentage of the value that gets created by Linux. And so, yeah, I think like it does help to have a single entity that kind of like manages the thing.
Yeah, and once again, like I want to be clear, I don't have any problem with that. I think that, and you probably observed this as well. A lot of what I have seen in the Ethereum culture is kind of like trying to play both sides of this. Maybe that's more my point. It's less about like I have some cypherpunk vision where nobody owns anything and it's all open source and like people contribute. It's less that. It's more, let's just be like transparent here as to what's going on with a lot of these things. I also would just add one other thing. If you can't articulate outside of some kind of nebulous governance rights why your token has value, it seems like it's this insane idea, but maybe like not release a token and decide if you can be sustainable without a token in whatever capacity, right? And like this is another kind of qualm of mine. It's like people think, oh well, you got to have this like this. You set up a DAO and you have these governance tokens, and yeah, like none of us know if we're allowed to have these, and like the rules are very ambiguous right now, and like that's not lost upon me. But perhaps it's like not releasing a token is never even thought of. You know what I mean? As one solution for the time being, at the least.
Yeah, and yeah, I agree with you. I mean, I guess there are some teams that are kind of going the tokenless route. And yeah, I guess we'll see how that goes.
Okay, one last thing. There's been some discussion about just prediction markets in general recently and how, I don't know, if they have some like cultural impact or if net negative to society, if everything is reduced down to a prediction market. This is kind of adjacent to Futarchy, but what are your thoughts on this?
Whether prediction markets are good or not?
Yeah, I mean, I don't know. I just saw some stuff on Twitter about, if everything becomes a financialized prediction markets, it can like destroy society.
I would say if you believe that and you work in crypto, you're probably working in the wrong industry, because that's what all this really is. Is it like hyper efficient markets, financialization of everything? Like eventually you'll be able to potentially like trade shares of like people, obviously not like ownership in the same sense, but like, I mean, I guess it's kind of like friend tech tilted towards, like all this is hyper financialization of stuff. I'm a big fan of hyper financialization. I think I should be able to buy clothing in an order book. Maybe I'm extreme, but yeah, I think like if you financialization, can be good. Markets, I mean, I don't know. I also view this as kind of like a Luddite stance, in that like markets are just like what the world has been shifting towards over the last 300 years. And so like you can want to return to the land or whatever, and like want to not have this stuff happen, but like whether or not you like it, it's probably going to happen.
Yeah, I agree with you on that. I guess maybe the point that was raised is like, if we have prediction markets for, I don't know, big cultural events or something, that it can, I guess, sort of change outcomes and influence outcomes. It's honestly not that intuitive to me, but I guess this is the argument, is that if we're like betting on everything, then now everything is reduced strictly to that betting market. But I don't really think that's true functionally. I mean, that doesn't seem true with like the U.S. election, right? Like, I don't think the outcome is determined by betting markets prior. Maybe if they got more liquid, I'm not sure, but yeah.
And if anything, it might be, well, yeah. I mean, yeah, I also don't tend to think that they're like highly reflexive. People have raised this for a long time. Like if you go back through the corporate prediction market literature, people raise complaints. They're like, oh, people are going to like bet that this thing is going to take too long, and then they're going to like drag your feet because they are now incentivized to make it take longer. I mean, there's definitely like some of that, but yeah, I think it's like by and large less important as opposed to just like, I mean, having a source of truth that's not dictated by any central authority. Like, isn't it kind of amazing that we now have these markets and we don't have to depend on any centralized news media source to like get our information? Like, we have this pretty good source of truth that's like, yeah, decentralized and works pretty effectively.
Yeah. Okay. Wait. Hang on. I found it was Hasu. Okay. Hasu made this tweet. He said, I'm just reading the part that's relevant. I personally see the mass adoption of prediction markets as a threat to democracy and an accelerant toward plutarchy. May not warrant banning them, and you probably couldn't anyways, but they are not unilaterally a force for good.
Yeah. I think I even responded to that tweet saying like, I disagreed. I mean, yeah, there's just not much evidence for that, really.
Yeah. I can't really figure out what that means actually. To be honest,
I'm also, I mean, like, I would say threat to democracy to me is a good thing. Like, if you talk to Futards, members of our community, like, we see Futarchy as like post-democracy. And so, like, democracy kind of sucks. So, yeah, it'd be good to replace it with markets. Like, why are we, like, the fact that we're still voting is, like, kind of barbaric almost. Like, we've improved our technology. Like, we now have AI. Like, we literally have, I like code on this cursor IDE that like can generate huge amounts of code that's like pretty accurate. And like think about how far we've come there, and yet we still are using the same or governance technology that was invented thousands of years ago, right? Like simple voting. And so like maybe it's good if we can transcend that and go past it.
But what do you think about simple, like for running a nation state? For Futarchy, is it okay? How does that work?
Obviously, there's no like stock or governance token, and so instead, what you do is you create financial contracts that pay out relative to constituent satisfaction. So, like instead of voting every year, we all go to a poll and then say like, how happy are you from 0 to 1, or how satisfied are you with your life, and then that all gets averaged into like a single number. That some financial contracts pay out relative to. So if like the average in the US is a 0.87, then the financial contracts would pay at 87 cents. And people bet on whether or not policies would increase the price of these tokens or financial contracts. And so they're essentially betting on like whether or not people would be more happy if or more satisfied with their life if you were to like implement one policy versus another. There are other ways you can do it. Like Robin Hanson has talked about trading citizenships is one way. I think that's like more difficult because it requires citizenships to be like fungibly exchanged. But yeah, so I think the simplest way is to do the financial contracts that pay out relative to satisfaction or welfare.
When you talk about these financial contracts, are there multiple and it's like a spectrum and you're voting on multiple different, I guess, policies versus just how do you aggregate this into one? Like, I guess what I'm asking is, it's like all these voters have different preferences and they may vote for, they may have certain different beliefs on a number of different things. Is this what you're aggregating then into like a single financial contract?
No, you're not aggregating beliefs. You're aggregating just like the thing that you're optimizing for. In the case of like a nation state, arguably they're supposed to be maximizing for public welfare. And so you're having people just like signal how satisfied they are with their life. And then that gets aggregated into this metric.
What are the variables that go into social welfare?
I mean, you can do, I would say, yeah, the primary thing is just like, are people happy with their life? I mean, you can do like other metrics as well. You can do like life expectancy. If you want to do like a healthcare policy, you can have people bet on how a healthcare policy would affect life expectancy or child mortality or other, like anything that you can measure, you can create a Futarchy around.
Okay. I need to think a lot more about this and read more about this. It's an interesting idea. I'm not qualified to have any follow-up questions there. I think this has been very informative. Thanks for coming on.
Yeah, thank you for having me.